Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
Hello people, my name is Kool-Aid Man 100X. Welcome to Black Money. Black people, listen. We're going to be reviewing LYFT. So let's go under the hood and see what this company actually got us to offer and see where it goes from there. We're going to be breaking down LYFT like we broke down Uber, so we're going to be breaking down LYFT as well. So the first thing we're going to know, first thing we always look at, if we put something into a company, we want to get something out of it. So does LYFT pay dividends? Actually, LYFT does not pay any dividends. LYFT does not pay dividends. It has no plans to distribute dividends in the foreseeable future and retains earnings to support growth operations. So the earnings they get, they put it back in the company, but you ain't getting nothing out of it. So that's already a red flag. Already a red flag there. So we already know where this is going. So yeah, this is just, so we're going to look at the chart. I always give you my 1 month, 6 months, a year. I always give you my 6 months to a year and 5 years or max, depending on how I read the chart, you know, all that stuff. So first thing we do, this is a day, what is like running LYFT in 6 months. So as we can see here, it takes a big drop here at negative 72%, which dropped the stock down to $13. So they took a big hit going from 19 all the way down to 13. So that's pretty bad if you think about it. So the drops just get worse and worse. So they're trying to get out to 13 or 14 whole, which is not good. So let's look at the year. God, they were up pretty well. I think their highest peak was 24 a share, but they took this big dip around that 13 area. So 5 years. Oh my God. And this is crazy though, because as you can see, LYFT was $62 a share, and they took this phenomenal drop. They were at $62. What happened? Within a year, 5 years, 76% negative. And the max, I guess, but God, this is past the 5 year mark just to get this. And that's just a recent update. So, we're already starting off bad with this, man. So let's look in up in the hood, you know, financial section. We're going to go to cash flow. We always start with the cash flow, and this is not good. First thing we're going to look at is the net income. They started off with 14.3, 46.7, 2.7 bill, dropped in 14. You went from 40, 46, 2.7. And just dropped to 14.27. Ooh, that's, oh God. How are y'all even functioning at that particular cash operations? It cost them, I could say this is standard. Well, it's everything online based, so this is a standard for it anyway. So about 2 to 3 mil, that's operations. But take that big drop from here, that's a lot. Change in inventories. No change in inventories. I figured that cash from investing 4.3, negative 70, 90, 50. Y'all kept how did y'all get into the negative and 179 negative, but y'all dropped down to 50? That's not good. Y'all don't really have much to invest. I guess y'all have been pulling your investments out to make up for your net income. I'm thinking that's what that problem is in a way, but a lot of people not explaining that. Cash from investing is not good. Let's see, what are y'all financing? Cash from financing. Oh my God. Ooh. you're still in the negative. So I'm thinking y'all financing softwares or developments, or if not, paying other people for softwares. That's the only way I can see this being financed, because y'all started off in a negative 67, dropped it down, got out of the negative, back in the negative, but back in the negative. Okay. The financing not good. What about your free cash flow? All right, you got 332. That's a decent cash flow. Low, but very decent. Unlevered cash is the same as your cash flow. That's not good because you don't have anything to leverage where you can actually go back into investing. So, that's not good. Let's go to your balance sheets. Let's go to the inventory. None. Well, everything's online based, so I can figure that for the inventory. Total current assets. Let's see. Total current assets. You got 2.7 bill, 2.9, 2.7 bill. So total current assets is very good. Y'all do have assets, which is pretty much Uber. So I think y'all is like compiling with Uber. So I think that's why y'all assets are very good, because they're using some of y'all or whatever. So makes sense, I guess. Weird, but yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my zero investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. What about the prepaid expenses? This is where it gets good. 3.6 mil, 4.406. Y'all expenses are pretty high. Yeah, I got up to 2 and got it down to 406, but this need to be lower. That's not good. Your total accrued expenses. Now this is where it gets interesting. Ooh, oh God. Oh, this is where all your money going. This is, God, what are y'all accruing? What expenses are y'all getting? Ooh. Term long. Oh God, I'm afraid to look. Other and long-term assets, I guess. 1.6 billion. So y'all pulling out y'all investments and total long-term expenses to make up for the accrued expenses that you have? Because for that to be 3, you're in the billions. So how are y'all constructing that type of expense? And y'all are just an online based company, if I'm not mistaken. Unless y'all are paying for ads, that's what I'm thinking. Y'all paying for it, but we don't really. Once you think about it, you don't really hear about Lyft like that. So it can't be ads. It has to be something else, lawsuits or something. Well, the recent lawsuit about the big girl. So I don't know. That's pretty. That's not good. Total assets. Your total assets, I want to look for that. Your total assets, decent. So total assets, y'all are pretty good, but that's a big hit. Y'all went from 903 bill to 8. So y'all are, just like I said, y'all are pulling from your assets to make up for your expenses. So I don't get that. That's weird. So y'all pulling off what you're investing to pay off other things. So that's not good to do at all if you really think about it. So you want to take that into account to make y'all business a little better. That's not good at all. So let's go to the earnings section of this here. So pretty much LYFT is, I would say, not good to invest. Oh God, they took some massive hits. But I would say the revenue is basic, but these are not good. They took a big hit, but revenue, billion. They're making the money, but they're paying for expenses, which is not good. So if you think about it, y'all investing, but losing at the same time. But, I guess is that reporting thing, but to each his own. It's not really, you're not really messing around with Amazon, Uber, and Tesla. So to each his own. I guess LYFT is actually trying to not just compete with the companies, but I guess work with them because their revenue is decent. But, the expenses are the revenue surprise, and you know, it kind of kills it in a way. So I would say, not good. For the overview, the company, I do recommend to buy, but I don't get it. How would that be an outlook to buy? But we're gonna get into that later in the video. From my instance for it, it's really not good to really look at it that way, but to each his own, I guess. So we're gonna look at the perplexity of, you know, the perplexity of the bullish and the bearish. So I like to read the bearish so we know what the company is actually going through, I would say. The Concord called the robot taxi. So they're doing the same thing as Uber for the robot taxi. So Lyft long-term profitability cites the short neighbor of AV transition and court reason and lower the price target and faces a climb to reach the 2027 target submit. So they're taking a hit for the robot taxi, but how would that work? I don't get that. Like, how would that work if y'all been taking a hit for damn near? I've been taking a hit for a year to 5 years. I took that hit, but Lyft active partnership. That's what I thought. They're working with people. I just said that they're working with people. The partnership with automatic vehicles, properties of the outlet pole, mobility, poison the platform, and casualty of AV revolution. So, that Tesla robot taxi missed it. So they're they're not a company. They're just like a partnership. They're trying to be a partner with somebody to make the company, but that doesn't even make sense. If that's the case, why do we need Lyft if you have Uber to do? Y'all following the footsteps of Uber. But let me think about this though. Do Uber own a part of Lyft if that's the case? Because I'm feeling as though y'all literally following the same path as Uber, but y'all don't really have any backing. Y'all just got the revenue, but y'all don't have any backing because I believe y'all trying to copy Uber, but it's not really working in a way, I guess, however that works. But to be honest with you, no. So we're going to jump into the consensus. The analyzed consensus is pretty much telling you the real raw reason of should you buy, should you strong, should you hold, or whatever, stuff like that. So they generally say hold, which is interesting to me, but the analysis say hold for recommendation. And based on it, they market basis say hold 33 handles, 9 buy, 22 hold, and 2 sell. So if you really was to break down Lyft, I said Uber. If you really break down Lyft as a company, I would not invest to them. ETF, yes, you know, index funds, all that stuff, yes. But to solely invest into Lyft and bank on the robot taxi, don't get me wrong. Right now for 13 a share, you know, right now it's probably going lower. So it's probably going to be around 12. So if you can, I would buy, but I wouldn't take any risk on Lyft like that. Cause I don't really see Lyft blow up like Uber. Like I don't really see that happening, but I do see it going. If I was to say Lyft actually increases in shares, probably 25 to 30, if not lower, 20 to 25. But going back to that 60, that's a heck of a feat where you got Uber at like almost over $100 a share. So just to bank on them for the robot taxi, I don't really see it as going to improve that well as far as the company. So, you know, this is all advice, but you know, you can invest in the way that you want to invest for Lyft. If you want to hold the company, yeah, but you ain't getting nothing out of it. Pretty much capital gains, but that's going to be long overdue for you to actually trust that type of thing for them to do. So robot taxi has not been good. If you saw reports of them taking off in the puddles, taking off in the waters, hitting walls, all types of crazy stuff with these robot taxis. So be mindful of that. Do your research with it. But I hope you enjoyed the video. I'm going to catch you guys on the next one.